Hello everyone, I'm BCraig with BCraigTrades. In this video, I kind of want to go over my trading strategy. I had to really switch up a lot of things. Just being with the market being so volatile, all the money being pulled out of tech. There was a lot going on, so I had to switch a lot of things up. So I kind of want to go over my new strategy I'm kind of implementing throughout my trading career going forward. And a couple things I think you guys can find useful. So first, I do want to start off with this Apple chart. I did play Apple today. Apple has really been my lifesaver the past, really the past month, all through quarter one and all the month of March. I really know how Apple trades, even though I did take a small loss in Apple today, but I really know how Apple trades and how it performs. So I'm able to trade it pretty well. When the market conditions are super volatile and choppy, I kind of like to trade names that I know, and it's just easier to trade when you know the personality of a stock, how it performs in certain market conditions. So Apple is really my go-to, and also Spy is another one that's been going to the past 2 weeks. It's kind of been hard to trade with flow. I trade primarily 60 to 70% just reading options flow and following flow into different names. But recently I've had to kind of switch it up and trade more so of technicals and charting support and resistance. So that's the other, like, 40 to 30% I trade on. But that 40 or 30% being the technical trading, I really had to make that a bigger part of my trading plan just because the flow wasn't there. The flow was just light for one. There wasn't that much money in the market the past 2 weeks or so. There's a lot of people on the sideline trying to figure out, what the market's going to do. You had, the bond yield rates rising. Tech was really, in the gutter. So there's a lot of money on the sidelines just seeing what was going to happen. But I think the market's just starting to shape back up to get back to normal. Today was kind of a normal. I've seen this today, days like today before. It was kind of a normalish day. I feel like it reminded me of a summer day, kind of light volume. Wasn't too much action, a little choppiness, and but that's like a normal summer day almost. That's what it reminded me of. But my trading strategy is, when I am trading certain names, I'm always waiting at least 5 to 10 minutes before I jump in the name. As you can look here on this Apple chart, look at all this chop that's right around here. Apple really didn't pick a direction. And it's kind of hard to, trade a name. So I really waited, and this is okay. This isn't a 5 minute. I've actually been using the 3 minute interval a little bit more recently. I kind of like it. The 1 minute is a little too sporadic for me. 5 minute is a really good indicator of the overall trend, and the 3 minutes is perfect right there in between. But like I was saying, the first 5 to 10 minutes of a stock in the market is really just figuring out what the market wants to do. And so I just kind of hold off a little bit, try to see, if I can see a pattern, if I see some momentum, And if I do see some momentum, then I can go ahead and trade that name. What actually would be better? Let's do this. I'm going to go, let's go on a 5 day, and we can go look at yesterday's chart. We actually killed Apple trade yesterday. So yesterday is more so an easier chart for you guys to look at to see how it trade. So as you can see in this chart yesterday, Apple had that first down, that red candle, but that's 5 minutes off the open. This is the 5 minute chart. So 5 minutes off the open, did have that red candle, but there's a lot of selling going on, profit taking during the 5 minutes. You can't really get a gauge on things. So after that 5 minute candle around 9:35 is when I saw that big green candle there, and that kind of got me excited, because for the most part that's a reversal candle. You see how big and thick that green candle is compared to the red, and it was shooting past some resistance also. Once it broke past there, I knew that, okay, I can go ahead and jump in this Apple play. So I went ahead and jumped in the Apple play, rode it on up, and I know I have resistance up here. The line, it's not directly accurate with the resistance. As you can see, it was bouncing off right here, but down here kind of went a little bit below it. So sometimes these resistance marks are almost like zones. They play for zones. It might not hit exactly on a certain dollar amount, but it'll bounce around a little zone. So once you start to get close to this resistance mark, I was unloading some of my shares, always just taking profit. So my strategy is, when I am scalping options, what I like to do is I like to scale out some of my trades. So say I get 10 20 contracts. Once I hit about 20%, I'm gonna unload a good 30% of those contracts. These 30 to 40% of those contracts right there. That way I can go ahead and collect some profit. A perfect example of that would be, right, let's see, we can go to Okay, so this is today's Apple chart. Now imagine I get into Apple right down here, okay? And Apple, let's see, what's this at? This is about 126, and it went to a peak here of 126.83. So on the options, you know, it's actually pretty moving. It's moving pretty well here. So while this is going up, if I'm not scaling out any right here, I'm just, you know, I'm just waiting for my profits to get bigger and bigger. But look what it did. It dropped back down. But if I went ahead and loaded at least half my position over here, by the time, you know, Apple drops back down, I'm not looking that bad in my P&L there. And that's why I like to scale out. And, you know, and on the other hand, it can kind of, it doesn't screw you, but right here, let's just say I'm exiting out most of my position, you know, and then over here, I might only have, you know, 5 or so contracts left. And as you can see, Apple did go higher. You know what? I'd rather go ahead and exit my position or start scaling at some of my trades, knowing that, hey, I missed some of my profits, rather than the example like we just used just now, you know, me not taking any profits up here or going this whole way up, and then it comes back down, and boom, I'm even more in the red than I would have been if I just was scaled out my trade. So that's how I scalp options. I scale out of my trades a lot. Like I said, at least 30 to 40%. I wait at least 30 to 40% of my position. I wait till I'm about 20% in the trade. 20% is a good percentage for me. Once I, you know, get 20%, I mean, and most of the time it's coming within, you know, 15-20 minutes, easy 20% of my money. And there's not anywhere else in the world where you can get 20% of your money, you know, within 10-15 minutes. So yeah, so that's a strategy I use to scaling out of my options. It's a strategy that works for me. You know, it works for a lot of the guys in the Discord group also. Like I said, sometimes you will miss out on your max profit, but those consistent gains are what's going to add up over time, you know. So yeah, you know, if you're not scaling out your trades, you might have that one trade where the trade that I scaled out of, I only made, you know, 500, and since you didn't scale out, you know, you made $1,000 because you sold it at the peak. But guess what? You know, maybe the next day, or another trade, another example would be, we were in the same trade, the trade goes up, you haven't sold any at all, I've been scaling out, next thing it dips back down, you know, and you're even more in the red. And what if that stock keeps going down? If the stock, you know, even once it starts going down, I already scaled out some of my trades, so at least I'm gonna be at break even or a little bit in the positive already. And that's just, you know, everybody doesn't trade like that. That's just a strategy that I like to use. It keeps me comfortable and comfy, and that's how I like to trade. Now if I do see a lot of momentum in the trade, a lot of times I will wait. I like to exit my trades on a lot of times in intervals of 10. So, you know, I might get a contract for $1, maybe $1.50, and once I get to, you know, $1.80 or so, I'm exiting some at $1.80, exiting some at $1.90, and so on and so forth. But if I see a stock has some good momentum, you know, I'll go ahead and wait another 15 or 20 more dollars on that contract. So, you know, that's kind of my strategy I've been using. It's really been saving me in this market. Like I said, the market it's been really tough, and it's a lot of traders out there that are way better than I am, and they've been having a tough time trading. So that strategy has really helped me out a lot. You know, I hope going forward we will see more of a stable market. Tech, it looks like it's recovering. The last Thursday, we wasn't trading on a Friday, that was a holiday, but last Thursday and Wednesday kind of looked good, like tech was starting to recover. Even here, I think it was recovery, even today and yesterday, the stock market and the tech stocks are recovering a good bit more. Here's some more money flowing into it, but I feel like once we really get over that hump, there's gonna be a lot of money that's gonna be dumped back into tech. There's a lot of money pulled out from it, and people really weren't, it wasn't looking too attractive there. But you know, Tesla, even though Facebook and Microsoft have actually done pretty well throughout this time, especially Microsoft. Microsoft actually just got that deal with the army worth like 22 billion or so, and I believe it was this day right here, yeah, where Microsoft is doing well. And actually, I want to go back out to this 5-day 15-minute chart. Yeah, as you can see, look at this. This is let's see, Monday. This is about last week sometime. You see, Microsoft's just on a good little tear here. Right now, it's kind of leveling off, like it's stuck in the zone between 248 and 249 here. So we'll see, you know, what's the next level it can break out. I do believe the stock has more upside to it. Another one that was kind of moving, you know, on its own terms when tech was trading down was Facebook. And here's a Facebook chart right here. This is the 5-day chart. Facebook's kind of been trading well, and you know, if tech was rallying, this chart wouldn't be as good. Wouldn't be trading. You know, I wouldn't say it's been trading as well. But since all of tech has been down a lot, this one has really surprised me. That's, you know, it's been trading on its own, has its own momentum. I remember trading this back in last year about October-ish, I believe, October, November-ish. And it had that ceiling right to 300, but Facebook was finally able to crack past that 300. And so we'll see where it can go from here. But I am liking Facebook, and Facebook, Microsoft, Apple, Spire been the ones that really saved me the last quarter and the last month. But yeah, guys, that's kind of been my trading strategy. Now I can kind of get back to trading the flow. The flow's looking a lot better. There's definitely some more flow coming in there, and I can kind of trust the flow again. The past 2 weeks it was a little bit tough, but things are getting back to normal, guys. I'm super excited to see how quarter two is, see how the month of April is for us. If you aren't already, make sure you go ahead and like and subscribe to the channel. I will leave a link for the Discord group. We are trading every morning. I'm there trading live on voice. I'm talking, narrating through all the flow, the chop, everything it might be. So if you want to join us, the link is actually pinned in the first comment, and I'll leave a link in the description for you guys too. But thanks for watching, guys.